I am a fan of Sofi. The stock saw its best days during the bull market of 2021. From $10, it rose to $28 per share within 2 months of trading. After that, it made 2 significant attempts to break through that ceiling, but failed. Both of the attempts, however, came in 2021, when we were still in the bull market. Ever since, the stock continued to decline, and at some point traded as low as $4.28. From the second half of 2022, the stock has been ranging between $5 and $10, without showing any real momentum to interest investors to take a stake in it. Today, the stock is traded at around $7.50. That is after it gained as much as 13% in the last 1 month. That can be a good sign for many, but only if you forget that it has lost over 23% year-to-date and is 70% down from its all-time high of $25.14 when the S&P 500 has gained over 22% during the same period. The question is where it is headed from here. Will it fall back to $5 per share or rise through hard resistance to reward its investors? Let's look at the chart closely. According to its weekly chart, Sofi will face significant resistance at the $8.50 level. If it can win that, it can rise to $10.50 quickly when it will face another resistance. It tried to break through the $11.50 level twice in the past year, but unsuccessfully. There is only one resistance 25% above that, at $16, until it challenges its all-time high. Sofi is an online personal finance company and online bank. Its business is connected to interest rates in the States. As you can imagine, the lavish rate hike by the Fed to contain the equally devastating high rate of inflation in the post-COVID era hurt Sofi's business enormously. People do not take credit when rates are high. Banks do not make money when money does not change hands, because there is no money to change hands. Even if Sofi improves its platforms and lending technology, the truth remains that the economy must come back to normal for Sofi to improve its earnings. Another dent came to it from President Joe Biden's announcement of student loan forgiveness of over $1 billion. Sofi is a significant player in the student loan industry. Suddenly, it found itself on the dry ground. I truly believe this situation will change, and you will see a strong momentum in the stock as the Fed begins to trim the interest rates beginning next month and through the coming years. The interest rates will have to fall significantly for Sofi to reclaim its all-time high, but if you are a long-term investor and have patience, you may take a position in this stock beginning with 1,000 shares and adding to it as it picks up. The other strategy can be trying to buy it at a cheaper price than its current market price by continuously selling weekly put options at a $6.50 strike price until you have been assigned enough shares at that price. We are very close to rate cuts, and you may not buy the stock at $5 anymore. Besides, Sofi has more cash in hand than its total debt amount, and it is trading close to its book value, which is $5.51. You may lose the opportunity if you wait until the rate cuts happen. I believe $6.50 is an excellent entry point for Sofi. It is a highly popular stock, as is Palantir. Palantir has gained 300% since January 2023. Given the ideal circumstances, Sofi can do the same. If you do not know how to sell put options to lower your buying cost, you can watch this video, where I take Tesla as an underlying asset and show you how you could buy the Tesla stock at a price much lower than the current market price. That is all for today. Thank you for liking this video and subscribing to my channel. Happy trading. Happy investing.